Everybody. Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream for October 27th. We are back with Logiq, one of our favorite stocks here on the next Super Stock platform. And for those of you new to our program, our goal is to bring you those stocks which have that 10x to 100x upside. So companies going after massive multi-billion-dollar market opportunities that are at a key inflection point and multiple catalysts in place. We've already had 9 stocks in the last 18 months that have increased between 1,000 and 5,000%. Of course, CBDT holds the record, up 5,000% in just 4 months. And Logiq actually, it was getting close. I think, Brent, when you first debuted, the stock went from 350 to 14 and change in about 3 months. It pulled back with the neo listing, for multiple reasons. And now, again, we've been talking about this for a while. We're at $2, $2.25. So here's an opportunity for people to get in basically at the ground floor again for that 10x upside. So, all right. So you're gonna show us a presentation, talk about the new.
I am.
Okay.
But I wanted to change it up a little bit this time. So. I had an interesting story that I think you in the audience would like to hear, but I do want to address that 10x to 100x statement in a second, because I was told that I never do. I always shrug it off and I never address it. But let me tell you the story first. So you've told me before that I should speak to one of your regular guests, Sean Black. And actually, a couple of my shareholders have told me the same thing, and they've made a bunch of money on stocks he's in. So last Friday, and I did ask him if it's okay for me to share this. I had a call with him, and you know what he began with, Jack? He said, "I know why people don't buy your stock. You know why that is?" He said, "Because you're too legit." And actually, I have heard that before, but and I'm going to paraphrase here.
In the microcap world, because you have, 40 million revenues, it's too real for people in a way.
That part too, but bear with me. He's basically saying that our story is much too complicated. I have heard that. We know that. We try too hard to sound smart. I talk about my team. I talk about our tech. I say stuff like, "Oh, do your research, do your due diligence." You know what? The people who are on here watching right now and that follow us on any types of blogs or social media or follow some of our followers, man, they know all this stuff. They're not looking for Microsoft or Apple. They can do that on their own. They can talk to their brokers or research it. They don't need to hear that from me. Okay. What Sean's point is people want to hear, what are you going to do for them? And how are you going to get there? And how much money can they make if they take a chance on Logiq? And so I'm going to change it all up. All right. That hour I spent with him was frankly one of the most well-spent hours I've had with anyone. So thank you for the intro. In fact, it made so much sense that I called around to shareholders I know and told them the story. And they all said, "He's exactly right. We've been wanting to tell you that forever." So I'm changing everything up. All right. I couldn't sleep last night. I was so excited about this. I've redone the overview. We're going to dumb it down, and I'm going to tell you guys how you're going to make money. Okay.
Okay. This is great. Okay. Because it's fun. We've talked about this earlier. I say, hey, people want to know, hey, what's the path to tech? I'm glad that listen, if Sean is the guy that made it happen for you, this is great. I hope he doesn't go into the IR business, because then I'll be out of business. This guy's too good.
Might put you out of business. But hold on. Before I do that, I do want to address the 10x to 100x statement. Do I believe that we should go up 10x to 100x? Hell yes. And do I know how we're going to get there? Hell yes, I do. And I'm going to take you through it. All right.
Okay, so let's.
Oh, and by the way, I just set up my Twitter account this morning at 3 a.m. I've got a whopping 17 followers. So if anyone wants to engage with me directly, man, please do. It's my Twitter tag is right there. It's at Brent Suen. I will do my best to respond to people. I'll keep it simple. I'll leave out all that jargon and all that other crap that bores people and keeps it complicated. But
So you'll answer questions afterwards if people contact you.
yeah, man. Yes,
okay.
absolutely.
By the way, you know, we're following you, Wall Street Reporters.
All right, I like it. You got a lot more followers, but I'm going to catch you there. Okay.
So 10x is not a lot. It's only $20. It's a relatively easy because you got almost there. You got to 14, and I'm looking at the chart. I mean, not that we're going to talk, but the chart wise, there's a real opportunity. And I've talked about it before. Is that the stock could go to like $40? I mean, it doesn't. I know it makes no sense, but the chart has that kind of path. So
it absolutely does, and I'm going to talk about that. I will absolutely talk about that. I'm probably not supposed to, but it is my opinion. And I believe that, and these are targets, and these are implied valuations. So I am caveating everything with that. And okay, I just used too big of a word. I'm going to keep this really simple. Okay.
Okay. Excellent. So with that, I'll disappear, and I will come back for the Q&A. So everybody, get your questions ready.
All right. Okay. So, all right. Everyone's heard me talking about a spinoff, and actually, unless you're in the financial industry or you've been part of a spinoff before, most people don't know what that means. Okay, so what does it mean? Okay, we are splitting the company into two parts. Why? Because no one we've spoken to that's an analyst or an institutional investor thinks that both parts fit together. They call that synergy, and apparently there's none. So we're going to split them in two, and that's the confusion that's been created, and this is the remedy. Okay, so for new people here, I've got to explain what it is that we do and why we're going to split the company in two. All right, so one part of the business that we call Logiq, it gets small businesses online. It's very simple. It gets them a mobile store, it gets them a mobile website, so they can be on this, all right? So where do we do that? We do that in what are called emerging markets, places overseas that have a lot of people and a hell of a lot of small businesses, but no computers. And everyone has one of these, but they don't have computers. So small businesses need to get on the mobile phone. We help them do that. Got it? This business does about 12 million a year. That's what we're on track to do this year. Okay. The other part of the business is what we call data logic. So what is that? So small businesses here in North America have to advertise and market their products and find new customers. We help them do that. Our focus for that business is here in North America. That business, Data Logic, is on track to doing 25 million for this year. So Logiq 12 million, Data Logic 25 million, combined 37 million. Okay, so slide 2. I'm not going to read all of this to you, but this outlines the stuff that we do in a little bit more detail while still trying to keep it simple. So Logiq, what do we have? We have what's called an e-wallet. That's money on the phone, digital payments. Okay, we have delivery and logistics. What is that? That's helping these small companies get stuff from one place to another. People order something through the phone, logistics and delivery apps help them get it. Okay, microfinance. What is that? Tiny loans to people in advance of their paychecks. We have an app that we are implementing for the Social Security Administration in Indonesia, where there's 50 million members. People can borrow money through their phone, through the app, against their paychecks or against their savings. Okay. And then finally, build your own app. That's basically getting them a mobile website and the ability to do all that cool stuff on the phone. The other side of the business, Data Logic. What does that do? Advertising, marketing, and leads. Finding more customers, getting in front of people. Very simple. Okay. So how can value be attained for the Logiq side? When we split it into two parts, shareholders are going to get shares in the Logiq spinoff or separation, if you will. We're going to take that public. And how can we get value? How can investors get there? Okay. If you look at the type of companies that are out there that are publicly traded, they're huge. The smallest, Peak Fintech, was actually on your show, and I'm going to tell a story about that in a moment. They're 12 times our entire market cap right now. The other ones, they're all billion-dollar companies. I mean, look at these. Grab, See, GoTo, Jumia, Mercado Libre. I mean, if you're an investor and you look around and think, gosh, how do I invest in these emerging market fintech companies? Well, they all have huge market caps. So they were all privately held before that. So unless you were a VC or private equity investor, you couldn't invest in them. And yeah, even when they went public, they've done really well. So there are big cap companies out there, but we think that as a micro cap, we're going to become very attractive to people. Okay. We believe that the value will end up being reflected, and our eventual goal is to get to $1 billion valuation. We believe that we will start at $100 million valuation when we do the spinoff, and I'll go through all the mechanics on our next show as we move towards it. But we've been talking about it. You all will see news surrounding that, and we intend to get this done well before year's end. Okay, so what kind of companies compete with Data Logic, and how are we going to get value out of the stock? Okay, so same thing. Big companies out there that trade at big values because their profit margins are high and their revenues are big. We're going to grow through mergers and acquisitions, or M&A. And as Jack has pointed out before, we're out there talking to people. We've been in discussions with a bunch of really cool, profitable companies literally every day. And we will acquire some of these at low valuations, and our valuation will end up reflecting it much like our peers do. So this slide, these are two examples of how it's done in the exact path that we are following now. Okay, so last year I was here on Wall Street Reporter, and I was in the virtual backstage when the CEO was speaking, and they were at 60 cents. Their market cap was the same as ours is now. What do? Well, they are a China-based fintech company. So emerging markets, fintech, same thing. All right. We are in Nigeria and Indonesia. These are places with a lot of people, a lot of small businesses, and a lot of opportunity. Now, Peak Fintech, since they were on your show, Jack, and everyone else, their market cap has gone from 60 million to 700 million. They've uplisted to NASDAQ. They've raised 40 million in expansion capital. And more importantly, they've acquired 2 companies recently, including one for 20 million. That justifies the higher valuations. So when investors come in and they buy the stock and it goes up, the way that companies reward them or justify that higher valuation and aim for a higher one is through acquiring businesses at low valuations that are privately held. And then you have the valuation gap narrow to the upside. Lightspeed, we met them last year. I've talked about it before. Their price was $20. Their market cap was $700 million. And they engaged in a very aggressive investor relations and public relations campaign to get the market cap higher first, raise growth capital, and make acquisitions. Here we are 18 months later. Their share price is $117. It's been as high as $150. And their market cap, it's 17 billion. So they absolutely did this. They've made multiple acquisitions. They've justified the huge increase in share price and market cap. This is the exact same path that we are going to follow. I know how to do this. This is what I did for years when I was at Bear Stearns. So the conclusion, all right, we're going to have 2 separate publicly traded companies. And if the valuation measures are applied that exist in our respective categories that we operate in, the potential for Uplisting could be between 100 million to 500 million, and Data Logic could be between 135 to 500 million. Combined that's 235 million to $1 billion in value. We've seen it happen with Peak Fintech. We've seen it happen 17x that higher range with Lightspeed. So that implies an upside of 4 to 16x from here. This can happen in mere months. I'm not saying it's going to, but it can. I mean, look at what Peak Fintech just did, and look at what Lightspeed did in 18 months. So here we are. We are right here. Logiq is one company. We've got a $60 million valuation. And I put on here in red letters, we are here. Okay. In November, down here, NASDAQ. Now, same thing as the whole 10 to 100x discussion. Played a little bit coy, kind of danced around the issue. We've said, oh yeah, we're going to uplist to a senior exchange. We never pulled our NASDAQ application. We left it in, and it needed to be refreshed because when we tried the first time, we didn't qualify. We've actually just refreshed it last week, which we should actually be talking about a lot more. We've given them a timeline of mid-November. We have an investment banker, Benchmark. Shortly thereafter, we will execute the company split. But if you look at valuations here with this little hand on the screen here, the implied valuation would march up as we start to execute on things. What are those things? Well, one would be an uplisting. Secondly, would be continuing to get out there and tell this story like this so people understand and they don't think, wow, this is this complex story. I don't get it. People need to get it, and they'll see where we are, and they'll see where the value is. And we will do the same thing that Peak Fintech and Lightspeed did. And as our market cap increases, we'll go make acquisitions, and we'll justify that market cap and even higher. And so can we be $1 billion or higher company? Absolutely. So I can share this with our viewers later, but I can take Q&A now. But essentially, we're at $2.30, $60 million market cap. My mission is to get us to a $200 price in a multi-billion-dollar market cap. Now, I need the help from all of you out there, but I'm going to be out there telling this story all day and getting in front of people like we did last year when our share price went from $1.80 to $14. We're going to do it again, but this time we're not going to stop. We're not going to go quiet. We're going to do all these great things we've been talking about. And my commitment to you is if our price goes up 10x, we'll do the same thing as Peak Fintech and Lightspeed, and we'll buy bigger companies to justify a 100x valuation. So with that, my show is my slideshow is done, and I'm happy to take questions.
Okay, excellent. So Brent, listen, thank you for sharing that last slide was actually very good because that kind of shows the path to to get there. Because there's a path for this thing to be at 10x. Now, it's interesting. Yeah, I mean the stock. Again, I think the issue the stock ran into was things were going great up until January. The stock was like $14, and once we started the Canadian IPO process because of their rules in Canada. Oh, you can't. The company can't do announce. So basically, you couldn't do any press, any news releases, nothing for like 6 months.
That's
and
right.
Short sellers. So it was like essentially a disaster. It was like it was a massive disaster. But if it wasn't for that, I mean, so it's actually the stock would probably be $20 today. So right now, I think there is an absolute easy path to get there. Now, once this, so I think the big question is this this spin out. Okay, so we're gonna split the two companies apart.
Yep.
Easily, I think definitely people will understand that because it's very interesting for the Logiq business, which is essentially fintech in emerging markets.
Mm-hmm.
That's a very hot market theme. It's something that people pay a premium for as a standalone business. When do you expect that to happen?
Very soon. Very soon. The goal is to have everything closed and done before the end of the year. But we've been moving very quickly. I think that there's going to be a very aggressive timeline that's going to be followed very quickly.
Okay. And so are we saying within like 90 days?
I think you're going to. Oh no, before the end of the year. Before the end of the year.
before the end of the year, we're going to have the two companies trading
Correct.
separately. Okay,
That's right.
Okay, so that's a pretty strong catalyst. If we get to before the end of the year, that
Exactly.
was pretty
So,
good.
so shareholders now, or people that are buying in, will have a record date that as of that date they will have shares, and then they will have shares of both companies that are trading separately. And the valuations on these are they're high. They're really high. I mean, you can almost get to that 10x just trading up to the low end of the range. I talk about that stuff a lot, but seriously, Jack, you made the point about the quiet period, and I haven't talked about this before. I'm sure it's not going to win me any fans in the investment banking world, but after the IPO, we had 2 months of nothing but selling from very poorly placed IPO shares. I'm sure I'm going to get a call from our bankers here, but
I think it's the Canadian. It's the Canadian thing. It's
in the hands of 7 funds. These guys blew the stock out over 2 months, and then as soon as the warrants got in the money, they started selling and exercising the warrants. Yeah, I'm sure we got some money in. Yeah, we're on a senior exchange, but it was really poorly handled. It was awful. And so, would I do it again? Probably not. But the enabling thing is literally NASDAQ came back to our advisors and said, hey, we see that your client has done an IPO in Canada. We like the NEO. It's a senior exchange. Would they consider coming back and refreshing their application? And we did last week. So that part's helped. Our share price has gotten the crap kicked out of it, but I'm going to be out there all day, every day, working on getting this thing up.
Okay, excellent. No, so you got kind of you're now you get the NEO thing then, which I know was a big goal to get to NASDAQ. But I think one of the issues that we've seen happen with Canadian financings, private placements, whatever it is that you have like a handful of institutions in Canada, which are mostly hedge funds essentially, that buy these deals and they just sell. They keep it's a whole process where basically that's why the one thing that all Canadian microcap investors fear is any type of financing. They know anytime there's going to be financing, they freak out because they know that these things are going to get shorted and it's going to be a disaster for a while.
We're not going to do any. I'm saying it right here out loud. We're not going to do any more financings in Canada. We're done there. Yeah, no offense to our Canadian viewers. I love Canada as a country, but we're not going to do anything like that that'll put us in this position again.
Yeah, no, I don't listen. I don't blame you. The one thing that Canada is good for though is you have retail investors that can buy microcaps in Canada.
Yeah,
there's a strong community, whereas in the U.S. it doesn't exist.
And look at Lightspeed and Peak Fintech, and look at Shopify. Acuity Ads. These are all Canadian companies. They're all listed there, but they also have U.S. stock too. I mean, it is there. I think that there is a on the retail side, Canadian investors get what we're doing. Okay, there are benefits that came out of it. Was it placed well? No, it wasn't. Could it have been done better? Yeah, but look, that's hindsight. But what are we going to do from here? We're going to get out and we're going to tell the story. We're going to bang the drum. And we're not going to let any short sellers or any of this other crap get in our way. We're going to get out there aggressively, aggressively.
Yeah, no. So it's interesting because again, my theory is that stocks can always go back to their previous highs, and the previous highs on the stock are far. I mean, essentially, when you do the spin with the two separate companies, there is really a path to well, you're talking about 400 million plus value easy, and the stock now is what are you trading at 37 million valuation roughly right now, 40 million.
Oh no, right now 60. And
60.
And by the way, we do qualify for NASDAQ right now. Not to get too granular, but it's called criteria 5505B. It's a $2 price and $50 million market cap. So we do qualify. So if anyone thinks, you got to be at 4 or 5, in some cases, yes, but we meet every other qualification.
So so just no reverse splits, right? No reverse splits.
No.
Okay, good. Okay. No more financings, no more Canadian financings, no reverse
Canadian
splits,
financings, right? No reverse splits.
Okay, perfect. All right. So bottom line is, so essentially there's a path now to that 10x. Let's see if we get some audience questions here. Okay. The spinoff, which is going to be the fintech business, is that going to trade on Neo? Where is that going to trade?
It'll trade in the U.S. We will start on the OTC market, and we will uplist. We're going to wait a year to uplist that one because we will build also through mergers and acquisitions. And I'll tell you right now, some of the privately held companies that we've seen that are venture funded, that are in the areas that we operate in, man, there's some really super exciting stuff going on. And these people have expressed an interest in merging in with us. Again, you pick them up at a low valuation because they're privately held, and then in the public markets they explode. I mean, look. When I first got on your show, I was talking about SEA. Man, that stock's up like 20-fold since then. 20x. They've got a $200 billion market cap. $200 billion. It's insane, but it's justified. They're going public through a SPAC. They've got a $50 billion market cap. 50 billion. GoTo, which is Gojek and Tokopedia, 40 billion. They're gonna be coming out soon too. There's no micro caps out there. I mean, you got a small cap, which is Peak Fintech, that got bid up.
Yeah, no, I think once you have the company trading, you have the two companies separate, then you can get those two it's basically going to be like, the parts are worth more than the whole,
Absolutely. And that's the feedback we've gotten. We sit down with these analysts at investment firms, and we've spoken to institutional investors. The feedback we get is, you say that there's, again, this word synergy. You say that there's synergy between your two businesses, but really there's not. You're an emerging markets fintech business over here, and over here you're an advertising, marketing, lead gen company in North America. So you can sit there and say all day long that they fit together, but really they don't. And if you separate them and you grow through M&A and you let market valuations take a hold of those, you'll get there. And we can do more. And without sounding brash or boastful, and with all due respect to the management at Peak and Lightspeed, I can do a better job. Okay. I've been doing this for 35 years. I was the youngest hire at Bear Stearns. I worked in the arbitrage department. We know what we're doing. Yeah, we got a kick-ass team. And yes, we know what we're doing on the M&A side. But if we get $1 billion valuation, there's no reason we can't take that to 10 or 20, because we all know how to do it.
So the key is going to be essentially is you're going to grow through M&A, both businesses.
Absolutely.
The fintech side and
I had calls this morning. I had one at 4 a.m. I was up anyway. Yeah, we've got a lot of activity, and these are exciting areas to be investing in and exciting areas to be operating in. And I'm thrilled.
Okay. So the ad tech, interesting. So the ad tech business is very similar to, it's kind of like Lightspeed basically, or what is it? The Trade Desk, etc.
Trade Desk, Magnite. I mean, there's a bunch of them. But what are they? I mean, they just help people advertise online. They help them find new customers. It's that simple.
It's essentially, and again, without getting too granular, essentially it's like, placing ads, optimization, targeting.
We've got all that fancy stuff. We've got AI and machine learning and all kinds of data scientists working for us. But you know what though? I think that the audience here, they appreciate that, and they can research all that on their own. They don't need me to talk about it. They need to hear me say that I and my team are going to take them on a journey to a higher level. Okay. And yeah, I got that from Sean Black, and I got it from our biggest shareholders, but it makes sense. That's what people want to hear. And that's what I'm going to give them.
Okay. Excellent. So now we got the path laid out to, getting back to, $15, $20 essentially.
And let's not stop there.
Okay. Excellent. Let's get to some audience questions. Okay. So Benchmark, the U.S. investment bank, Are they okay? He's asking, are they on target to do the spinoff this year of the fintech business?
Correct.
Okay, so this year,
2000.
Okay, before December, before the end of the year. Okay.
Yes.
Okay. Let's see here. Will there be more fundraising during the NASDAQ listing?
We intend to do a financing round when we uplist. Now, ideally, we want to do that up at $6 or $7. So we need to get there. Okay. And that's not aggressive. That's not overvalued. We've been there before. We should be there. Actually, we should be well beyond that now. Hope I'm not going out there too far by saying this stuff, but this is my personal opinion. This is exactly what I believe. We will get there.
What are the gross margins for the two businesses, the fintech side and the ad tech side?
Good question. Okay, so if you look back a year ago, they were in the teens. If you look at our last quarter, they were up in the very high 20s, almost 30. For Logiq, they were as of the end of the second quarter at right under 32% gross margins. On the Logiq side, they were about 28%. So we've doubled our profit margins in a year. That's I'm being simplistic here, but that's the equivalent of doubling the revenues. So if anyone says, "Oh, you guys flatlined, you're flatlining this year over last year," yes, but we doubled the margins. That takes a significant amount of work and restructuring. So we actually took advantage of what happened during COVID to revamp the business. And going forward, we're driving at high margin business. Can we get that on M&A as well as internal growth? Yes, absolutely. We're on track to doing so. Some of the companies we've been in talks with, these guys are 40, 50, 60% gross margins. And a lot of them are profitable, but they're private. And yeah, some of them are 2 to 3 million, but you bring that in, your cost savings, the layering in of the gross margins, the ability to grow. Man, there's some really great stuff that we can do. Really great. And as shareholders, you guys are going to be thrilled when you see what we're doing.
Okay. So question. Oh, this is. I guess you address it. So an investor. I don't know what it says there. Which is the biggest challenge for Logiq is that investors did not see the high growth of revenues and the profit and was not making profit. So I think people are asking because the company got to 37, 40 million run rate. So is it not growing fast? So why did you kind of do this restructuring? Like you had the revenues, but the margins weren't there. Like what's different now than before?
Sure. Okay. So again, and I didn't catch the name of the person who just asked the question. But if you can read there you go. I can't read that. But anyway, so again, last year we did about 34 million in revenues. This year we are on track to doing more than that. But again, we have doubled our profit margins by restructuring the business around the type of customers we serve. So yes, we had a bit of a retracement on the Logiq side because we gave up all the low margin business and focused around the higher margin customers. And we hit that V shape and we've emerged from it. And by continuing to grow in that manner, when we start to track back up on the revenue side with higher margins, you get to profitability faster. Okay. And as for dilution, unfortunately, with a lower valuation, when we've raised money, which everybody has to do to grow, there is dilution. I got diluted too, but as you've seen, I buy shares every few months in the open market, and I've never sold a share. Actually, no one at the company has sold a share. And as far as profitability, if you look at the overviews and the presentations that we've put up here, no one's profitable yet. They're all looking at profitability in 2 years because when you're on a high growth trajectory, which we have emerged on, and you're revamping the gross margin profile, profitability. If you stop spending and you stop expanding, we could be profitable next week, but we'd stop growing. You have to spend to grow. You have to acquire to grow. You have to raise additional funding to grow. But at a certain point, it all becomes accretive, and then you have the stock take off like the Trade Desk did or Magnite. And so, are we planning on getting there? Absolutely. Did they raise money? Did they dilute? Yes. Are they profitable? Not yet.
Okay, Brent, two last questions here. What, in terms of news flow, what can we expect between now and the end of the year? Besides the spinoff, we have that's a big catalyst. What else can people expect to see coming out?
We're going to start talking about companies that we are partnering with, and what's very interesting is, and I kind of shied away from it before, but that's done. Okay, the whole M&A thing, that is full speed ahead. The great thing about companies that we're meeting and talking to about either merging in with us or being acquired is actually most of them, even if it's not an exact fit or we can't agree upon a valuation, we're still structuring business relationships with them, which is great. So it is, I don't want to say win-win. It is almost a no-lose proposition. So we're meeting these people who either become customers or partners, or they get merged in. I mean, it's great. And we've met some really great companies. I mean, awesome management, great product lines, perfect fits. And so, even if we don't acquire them, we're going to be doing stuff with them. So we'll be talking about those as we sign things with them, and we're moving really fast. We'll be talking about the initiatives and updates on what we're doing in these emerging markets that we operate in: Indonesia, Nigeria, Vietnam. There's others we're looking at, and others we're having discussions on. So yeah, you're going to hear a lot about that.
Okay. No, I think that'd be very exciting to have that emerging markets fintech business. I mean, again, you're kind of in the hottest areas.
We are
Nigeria, Indonesia. That's kind of like, we're those are the huge markets. I mean, I think Nigeria has a couple 100 million population.
Oh yeah,
something huge. It's
it's massive.
It's like that's like the last frontier. We've seen Jumia stock do very well there. And Indonesia, that's SEA. We got, I think, Alibaba and what's
Grab.
Everybody's going after. Yeah, it's a very exciting market.
And we've been operating there for 4.5 years. I mean, I'm not doing it remote control. We've got a team on the ground there that have been working with us for years. We've got great connectivity there. We've established a small yet important foothold there. And as we grow through additional M&A, we absolutely have the potential to take on these unicorn valuations that further enable growth. Because these getting to a higher market cap is not the end state; it's the beginning. Because what you can do with that, man, you can do all kinds of great stuff with that. That's what Lightspeed did. They could have stopped. Forget about, they're at 17 billion, and they're not going to stop. I mean, growth begets more growth.
Yeah, no, I mean, look, we've seen companies that once their stock increased, they're able to do they either raise capital, do M&A. Like we've seen many companies. Like was it, I think Nextech. I mean, last year it was the stock made the company.
Peak is doing it right now.
Fintech. Yeah, sure.
Yeah.
And I'm trying to think who else. CloudMD. I mean, I can go down the list. I mean, the stock really was the key driver in enabled the whole success. Last question is kind of our favorite, which we haven't asked in a while, which is, okay, in your opinion right now, what are the top 3 reasons for investors should why they should consider Logiq right now?
Well, my old standard answer was do your due diligence, look at our team, look at our tech. You guys can do that stuff on your own. You don't need to hear it from me. What you do need to hear is am I going to be aggressively out there like we were last year when our share price went from below 2 up to 14 all day, every day? Yes, I am. We are going to kick in a very, very aggressive market awareness campaign, investor relations, public relations. Because again, what that does, you get a higher share price. Okay. You do the right things structurally to justify an even higher one. And we know how to do that, and we're going to do that. So that's my one reason, which encapsulates all the others.
Okay, perfect. Brent, on that note, I want to thank you. And we're going to follow up with you for the next big news announcement.
All right. Good stuff.
Thank you. And thank you everybody for joining our live stream.
Thanks everyone.
See you on the next one.
Great.